Good morning, you're watching Business World Live. I'm Danny Laurel.
And I'm Jess De Los Santos. Here are the biggest stories to kickstart this trading day, Tuesday. Remittances hit a 3-month low in February as many countries saw a fresh surge in COVID-19 cases.
1.3 trillion pesos, that's the amount of debt the government has incurred for its COVID programs, and the DOF says it will take decades to repay those loans.
Senate President Tito Soto hopes to save the proposed SIM card registration law by organizing a campaign to override the president's veto.
And Russian President Vladimir Putin says the barrage of economic sanctions against Russia has failed. We begin our broadcast with the growth in remittances growing at a slower pace in February.
Now, the Bangko Sentral says the slowdown reflects the resurgence of COVID-19 infections in many countries across the globe. Fresh data from the Bangko Sentral show that cash remittances rose by just 1.3% to more than $2.5 billion in February. That's on a year-on-year basis. This is the smallest monthly inflow in 3 months, and the growth was the slowest since the 1.7% fall recorded in January 2021. The United States, Singapore, and Saudi Arabia were the top sources of remittances in February. The Customs Bureau has collected some 60 billion pesos in duties and taxes from its fuel marking program in the first quarter. The agency reported that it marked 4.7 billion liters of gasoline, diesel, and kerosene from January to March as part of its efforts to curb smuggling. Diesel accounted for 60% of the total volume marked, followed by gasoline at 39%, and the rest were kerosene. Speaking of fuel, oil companies are hiking their pump prices today. That's after 2 weeks of rollback. Gasoline and kerosene prices are up by 45 centavos per liter, while diesel prices have increased by 1 peso and 70 centavos per liter.
Now, the Finance Department reports that the government has borrowed a total of 1.3 trillion pesos for its COVID-19 response programs. Broken down, the national government raised almost 560 billion pesos from ROP bonds. That's over 303 billion pesos from ADB and almost 293 billion pesos from the World Bank. Now, other loan sources include the Asian Infrastructure Investment Bank, JICA, the Agence Française de Développement, and the Export-Import Bank of Korea, or KEXIM. The Finance Department says repayment will require a fiscal consolidation program and improved revenue collections.
Now, an economist says government borrowing remains prudent despite the marked increase in public debt. RCBC Head of Economic Research Mike Ricafort explains the country's external debt to GDP ratio is still relatively low compared to other ASEAN and similarly rated countries. Ricafort says most of our foreign debt is also medium to long-term in nature to prevent the risk of bunching debt maturities. Now, to discuss what he means by that, among other things, we have on the show Mike Ricafort, head of RCBC's Economic Research. Good morning, sir. Mike, thank you for joining us today.
Hi, good morning, Jess and Dan.
Okay, sir, picking up from that report, you're of the opinion that government borrowing at this stage remains prudent, even as debt to GDP ratio has exceeded international accepted benchmark of 60%, even hitting a record of 12.09 trillion pesos. Why is that? And does that mean that the government has room to borrow more?
Well, that's the big picture, Jess. The overall debt to GDP ratio at around 60%, which is the international threshold. So it means that the government's debt should be either, that should be the maximum, enabled to maintain the relatively favorable credit ratings, or better yet, if that would go down further, and that would be a function of a faster economic growth and recovery. We have seen this already almost 20 years ago when debt to GDP ratio came from a peak of 70% levels. Then it gradually went down. Actually, it took about around 7 to 8 years for it to go down to around 50% levels, and another 7 to 8 years for it to go down to 40 and reach the low, the 39.6% low, which happened to be prior to the pandemic in 2019. So that provided a lot of buffer, a lot of leeway for the government to increase its borrowings because everybody else around the world also did the same in funding for the various COVID programs, which is, that's why the country's credit ratings have been maintained over the past 2 years, at least at the very least compared to other countries, some of which saw some downgrades in either the actual credit ratings or in the outlook. So if you look at the breakdown, the foreign debt to GDP ratio, it's of course it's still at the late 20s level. That is still considered relatively low. Of course, that's learning from the lessons in the past crisis periods over many years and decades. So the government as well as the private sector have been prudent in managing foreign debt, especially when it comes to hedging foreign exchange risks.
Okay.
So,
Sir, just to interrupt you on that point, since you've already mentioned it, is there still a risk on the table that our credit rating might deteriorate, or is that complete? Have we already managed to circumvent that?
well, definitely, Danny, it's a function of what the government does, especially now that we're near the elections, what the new administration, what the new president would prioritize when it comes to fiscal spending. So far, the Philippines has been fortunate to have good economic teams over the past at least past 10 to 20 years in terms of managing the country's fiscal performance in a sustainable manner, as has been manifested by the improvement or the easing of the debt to GDP ratio over the years. So of course, the COVID-19 pandemic, that's something unforeseen and for two issues, in the sense that many other countries around the world also borrowed a lot. Of course, it's really to pump prime the economy, provide support, financial assistance, the hardest hit sectors. So now, that's based on economic cycles. That's a role of government and central banks. So they do provide all the necessary fiscal and monetary policy support, all out, especially this one. This is the pandemic, unprecedented in recent memory. So now, when economic conditions improve, there would be a need to somewhat compensate for that. In the sense that there's a need to further intensify tax collections, the need to further bolster the recurring tax revenue sources by way of the various tax reform measures, implementing the existing ones and coming up with new ones. So that would be the more sustainable path going forward.
Now,
it's really... Yeah, go ahead.
Sir Mike, very quickly, earlier you mentioned external borrowings for one is still at manageable levels. But how much of a risk are we looking at here, especially when it comes to the local currency? That, of course, has it a 2-year low. So is that much of a concern at this stage?
Well, what's really important now, especially with the new president of the Philippines and the new administration, is to give that continued reassurance when it comes to, sustaining the momentum in terms of improved fiscal performance and the need to catch up also to make up for the sacrifices made during the pandemic. So, yeah, that would be one. That would be in terms of narrowing the budget deficit. So, as the economy reopens further towards greater normalcy, so definitely that would help the pickup in recurring tax revenues, intensifying further the tax revenues and the reform measures. And on the expenditure side also, it starts and ends with good governance, anti-corruption, anti-leakages. And we have seen that over the past 10 to 20 years to sustain all of this, to maintain the relatively favorable credit rating so that, the government could continue to finance its national budget, the various COVID programs, its budget deficits, at relatively lower borrowing costs and at favorable terms with that. So that's why it's very important to maintain the fiscal performance. So that would be, everybody would be looking at what the new president of the Philippines could do, especially if that person will choose a credible, competent, and well-accepted economic team, and continue and sustain these policy priorities and reforms to ensure fiscal sustainability and, of course, the overall management of the country's debt.
Sir, let's talk about the remittance sprint, sir. Jumping over to that, consumption and how that would be affected. Kasi the January to February print was lower than what economists were hoping for. Dapat above 3%, 3.7% pa nga. It came at just 1% levels. Sir, and this was, February 24 was the beginning of the Russia-Ukraine war or the invasion there. So we haven't really felt, the impact of the remittances yet for the month of March. How worrying is this for you? How much longer is this rut in remittances going to be?
Hopefully, Danny, the slowdown is temporary because the data is as of February, and the whole world experienced a surge in COVID cases, particularly the Omicron cases, since January to February. Yeah. But that has been contained already, even locally and in many other countries, except for a few countries. Hopefully that would improve the remittances data going forward. And there are many also factors that would support, because many industries around the world have reopened, particularly the hard-hit ones related to tourism. So that would require also the hiring of more OFWs. We need to recognize the fact that more than 900,000 OFWs were repatriated over the past, during the 2 years of the pandemic. And definitely, many of them already found or restored the jobs that they have lost because many host countries around the world, their respective economies are almost back to normal. And that has been supported also by the increased vaccinations towards population protection, and if not, towards herd immunity. So of course, realities now in view of the Russia-Ukraine war, it's widely seen also that that's going to slow down the global economic recovery a bit, and that would have also an indirect adverse impact on OFW employment as well as remittance.
We take it to mean, Sir Mike, at least the slowdown in remittance growth that we are experiencing primarily still is due, of course, to Omicron-driven surges in other parts of the globe. Speaking of which, Sir, how is that going to affect our recovery for the year, especially now you have concerns here? Even the WHO is flagging the possibility of 300,000 active cases by mid-May. How is that in any way going to impact our bounce back for the year?
And it's very important, Jess, to sustain the gains when it comes to curbing or effectively managing the new COVID cases. Now it's still less than 300 per day, and hopefully this would be sustained, learning from the past lessons. And of course, it's really important to strictly observe the minimum health standards, the wearing of masks, social distancing, and so on. And of course, fundamentally, further accelerating the vaccination, including the booster doses. And there have been proposals already to also come up with second booster doses. This is very important to sustain because the economy is practically open. There are already proposals for a nationwide alert level 1. And definitely, we're still coming from a low base. So expect magnified year-on-year GDP growth for the coming months. So at least 6%. We won't be surprised. Pleasantly surprised if it would even reach 7% in view of that.
All right. Thank you so much for those updates. That was, of course, Mike Ricafort, Head of Economic Research over at RCBC. Thank you, sir.
Thank you so much, Jess.
Senate President Tito Soto said he hopes to save the proposed SIM card Registration Act. That's by overriding President Duterte's veto. The palace says Duterte did not approve of the social media registration provision, which he fears may pave the way for surveillance in violation of constitutional rights. Soto says the way to go around this is that both congressional chambers will overturn the veto, and the provision that the president dislikes can be questioned before the Supreme Court. The Senate president says an override can be done by May 23 if his proposal to seek a constitutional challenge is approved by the president. Meanwhile, the bill's author, Senator Win Gatchalian, vowed to refile the measure.
Investment promotion agencies have received 58 billion pesos worth of budgetary support from the government. This amount is mostly used for capital outlays and maintenance spending. The Finance Department, however, noted that most of the agencies remain dependent on government funding. The Department of Finance noted that only PEZA and the FI-VDEC Industrial Authority are self-sufficient or are not receiving subsidies from the state.
Now on to some developments on the global front. Russian President Vladimir Putin says the barrage of sanctions imposed against Russia have failed. In a televised meeting with top economic officials, Putin claimed that Russia has withstood unprecedented pressure and that the sanctions have backfired against the U.S. and its European allies. Sanctions against Russia have been in place since February, following its invasion of Ukraine last February 24.
Можно уже уверенно сказать, что такая политика в отношении России провалилась. Стратегия экономического блицкрига не удалась. Более того, санкции не прошли даром и для самих инициаторов. Имею в виду рост инфляции и безработицы, ухудшение экономической динамики в США и странах Европы. Только за последние 1,5 месяца потребительские цены в России заметно выросли на 9,4%, а в годовом выражении по состоянию на 8 апреля инфляция составила 17,5%. Обращаю внимание коллег из правительства, Центрального банка. Мы знаем об этом очень хорошо все. Это очень высокие значения. Люди чувствуют это на своем семейном бюджете. Чувствуют, как выросли цены. И нужно поддержать наших граждан, помочь им справиться с инфляционной волной.
Coming right up, we'll check how financial markets are performing this morning.
More of that and other stories when Business World Live returns. Stay with us. Ano ba yung mga ads na yan?
And you're still watching Business World Live here on One News. I'm Jess De Los Santos.
And I'm Danny Laurel.
Okay, Dan, give us first a health check on our local unit. That's on the back of lower than expected remittance print.
All right, Jess, take a look at my terminal here now, trading at 52.3352, the greenback. I'm, afraid to say that it's been weakening. You can see that we were already strengthening around mid-March or mid-April rather, and now again breaching or closing to breach that 53 levels to the greenback, which are quite worrying. But I did want to show you how our currency is ranking, if I can get my terminal to be working for us here. Nevertheless, the currency has actually been at the bottom of the Asian rung. We're around 9th in place compared to our other Asian neighbors, at least year to date. Let's take a look at how our markets are opening this morning. That is one form of good news, I would say, back above the 7,000 levels, jumping by around 2% in the past 3 days of trade after, of course, that break we're in before the Easter holidays. We were closed below that 7,000 levels. And finally, one very important sector to be watching out for here, especially on the back of that lower than expected remittance sprint from January to February. Of course, Mike Ricafort of RCBC had mentioned that might just be a temporary setback. Nevertheless, the property index staying above water here, up by 0.2%. A couple of stocks I wanted to be watching out for here. Just yesterday, we were looking at Emperador, which had been surging way above 20% over the past few days, amid that news that they would be able to, raise funds over in Singapore. Now they have said there's no decision to do an IPO or raise funds at this time. And so you can see that pulling back down to earth, or at least at 16 pesos and 88 centavos per share. And speaking of IPOs, Jess, there was one that went public right ahead of the Easter holiday at 1 peso, raising 1.375 billion, and that was CTS Global Equities. Take a look at that, from 1 peso, trading at 1 peso and 7 cents. So for those who bought in at 1 peso, you already made 7 cents in the past 3 days, Jess.
All right, that's a first look into the business day this Tuesday, April 19, 2022. Join us again tomorrow at exactly 9:30 a.m. You can also catch us on Signal Play. Register for a free account now at www.signalplay.com and stream One News Live anytime, anywhere. I'm Jess De Los Santos.
And I'm Danny Laurel. Thanks for watching. Mask on, wash hands, stay safe, Philippines. We are One News.